I'm Casey Williams, and we are going to do a presentation today on how to start a nonprofit arts organization. We have people online, and we have the three of you here, and some other people have come in. Brief introduction on who I am. I'm an attorney here at Donahue Fitzgerald. We're a full-service business firm serving in Oakland. We've been here for almost 100 years. And I head up the nonprofit practice. I also have an employment practice, and sort of the overlap between the two, it's all about getting people to work together to fulfill their missions. So I really like both my practices, and I particularly like doing this kind of pro bono work. So our agenda for today is pretty simple. We're going to talk about four main areas. I'm going to give us sort of a legal framework for understanding nonprofit organizations. Then we're going to hop into talking about the incorporation process, obtaining a tax exemption, and then finally I'm going to talk about alternatives and resources. Please interrupt me as we go along, ask questions. If you don't understand something, it helps to have context when you don't understand it instead of an hour later. And I will endeavor to answer your question as much as I can. If I can't, I'll give you my card, email me, we'll figure that out. Does that sound good?
Yeah.
Okay. Cool. All right, so let's jump right into the basic legal framework. Well, wait a minute. I am an attorney, so let me give a disclaimer, actually, first, before we get very far into it. This presentation is about legal concepts related to starting an arts organization. It is not specific legal advice pertaining to your issue. Please don't rely on it. The law changes, including in this area. And so if you have anything, either consult the appropriate resources or reach out for an attorney. You can call me, you can reach out to the CLA, whatever makes sense for you. Okay, disclaimer understood. You all nodded, that's assent. You owe me your firstborn. Okay, part one, the basic legal framework. I'm going to try to make this as an exciting topic as possible. It can be a little drab. It's corporate law, basically, despite the sort of egalitarian kind of do-gooderness of nonprofits. At its core, it's really kind of basic business corporate law. And to understand a lot of what we're talking about, I need the world, but especially you here in this room, to understand one basic concept. There is a difference between a corporation and 501c3 tax exemption. They are not synonyms. You hear often in the world people say, I want to start a 501c3, they're a 501c3. A 501c3 is a status under the Internal Revenue Code that entitles an organization to not pay income taxes. It's an amazing status. It's a status that almost nobody experiences in the world, right? Like what's certain in life, death, and taxes. But it's a status. It's not itself a thing. Right? You can't pull a 501c3 off the shelf. You can't transfer a 501c3 to something. It's a benefit, a privilege. A corporation, however, is a separate and distinct legal entity. It is akin to a partnership. It is akin to a limited liability company. It is a business entity created by the state that allows the people behind it to function with certain benefits. You can have a corporation that's a nonprofit and does not have 501c3 status. And they can do lots of things. Maybe they don't have any income, so they don't need the tax exemption. Maybe they work with a fiscal sponsor. These are all things we'll talk about a little bit longer in our presentation. But that central concept, corporation, nonprofit corporation, is different from 501c3. It's one of the things I'd love everybody to take away today. And it will help frame the rest of our conversation. When I said that a corporation is a separate and distinct thing, it is actually something that is permitted under the California Corporations Code. And California Corporations Code section 5111 states that you can form a nonprofit corporation for any public or charitable purpose. What makes this corporation different than a for-profit corporation are a couple core functions. The first being its purpose. A nonprofit corporation has a public purpose as opposed to a private purpose, right? It is created for the purpose of furthering some public good, for addressing homelessness in Oakland, for inspiring people to get into ceramic arts, for highlighting traditional music of Hmong people, right? It has this grander purpose beyond the interests of the people who formed it. A private corporation, it's about maximizing revenue, it's about creating profit for the individuals who started it. And the ownership structure of the corporation is very different. You guys hear about shareholders, own corporations. Nobody technically owns a nonprofit corporation. You can have members that have certain voting rights, but they have no ownership interests. They have no right to profits. And if the corporation dissolves, they have no right to the money in the bank. Right? Corporation dissolves, the shareholders usually split anything that's left over. With a corporation, because nobody owns it, the corporation's code says that the funds need to be donated to another nonprofit. So that's one of the core functions that makes a nonprofit corporation different than a for-profit corporation. And the other is where they're getting their money, and we're going to talk a lot about money because that's kind of what 501c3 tax exemptions are all about. But money for most nonprofits come from donations, grants, government funding. For nonprofit or for for-profits, it comes from private investments, shares, loans, the whole startup culture that you hear talked about a lot in San Francisco. That's all private equity funding going to corporations. Nonprofits don't have that. They have to go out there and fill out grant applications and ask for the kindness of the hearts and apply for grants. So they're different sort of revenue structures. However, like all good business entities, both for-profit and nonprofit corporations are highly regulated. And we're going to talk a little bit about that. I don't know if you saw today in the news, a bunch of information broke on some enforcement actions against the Trump Foundation, which is a nonprofit corporation. And all of those are coming through the regulatory agencies that oversee nonprofit corporations. The Attorney General's office in particular in New York, but California Attorney General's office also has oversight over corporate or nonprofit corporate entities. So that's some of the distinctions between nonprofits and for-profits. We can see though that they're business entities, right? They have a purpose, just like a for-profit. They have ownership structures of sort. They have sources of revenue, and they're regulatory business entities. IRC section 50C31, however, is different. It does not create the corporation. Instead, it gives the corporation a tax benefit if it is produced for a religious, charitable, scientific, testing for public safety, literary, or educational purpose, or the fostering of national or international amateur sports, and the prevention of cruelty in children or animals. There is a lot in this statute. If you read it really closely, you can determine a lot of the core features of a 501c3 organization. They have to be a corporation, right? We talked about that. Or a few other types of business entities. They have to have this core purpose, and they are not created for the private benefit of any shareholder or individual. The statute goes on to say that they're not supposed to be engaged in legislative activity, electioneering. But this is the core statute that underlies the tax exemption, right? Which we talked about. A core distinction here between the corporation and the tax exemption. Now, I said that both for the purposes of corporate law and for the purposes of tax law, that the entity needs to be formed for a charitable purpose, right? So we're here today to talk about the arts. This is supposed to, this presentation is supposed to empower and provide folks who are working in the fields of arts or who are counseling artistic organizations with some legal information on how to create a nonprofit. Charitable is a purpose for which a nonprofit corporation can be incorporated and obtain its tax exemption. And it is defined sufficiently broad enough to include the arts. Having an organization set up for harmony singing or to promote an appreciation of jazz or almost anything you can think of that's connected to the arts will generally fall within the charitable scope of these laws. So when I'm talking about charity, try not to get too focused on maybe ideas like soup kitchens or food banks, but we're also talking about the arts in general. Okay, primary reasons to start a nonprofit corporation, right? Why would you want to do this? You have a client that comes in, they're asking you about it, you're helping out your friends, your own organizations. Why do you want to do it? The 4 primary reasons you would want to start a nonprofit corporation are limited liability for your directors and officers. Corporations are limited liability entities. The idea is that they are distinct and separate from their founders, from their directors, from their officers. They can enter into their own contracts, they can enter into their own leases, they can have sponsorship agreements, they can have bank accounts. And if they have debts and liabilities, they alone are responsible for their debts and liabilities, the corporation. The people behind the corporation have a shield from liability, assuming that they comply with certain corporate formalities, that they don't commingle funds, that they don't take advantage of the corporate structure to commit fraud or misdeeds. So generally, if you volunteer for a board and you act in good faith and you don't do anything fraudulent, you should be experience limited liability from the obligations of the corporation. Does everybody understand that concept? It's probably one of the most central important reasons people function through business entities anyways, right? You don't want your home, your child's college fund to be on the line, and you still want to go out and participate in these activities. So limited liability, one of the core reasons. The tax-exempt status, our 501c3 status, is the other primary reason that somebody would create a nonprofit corporation. And the donations that come to a 501c3 organization are generally tax deductible, which creates a very, very strong fundraising tool. And finally, there are ownership issues related to intellectual property that I think for arts organizations in particular are an important reason to start a nonprofit corporation. Let's say you want to do, you want to start running a podcast, right? And you're not sure who's going to own it. Is it going to be you? Is it going to be me? Is it going to be our friend? We're all kind of contributing to it. None of us want to profit off it. Who are we going to have hold that intellectual property? When you create a corporation, it solves that problem, because the corporation will then be the holder of that intellectual property. I think the CLA does a cool presentation on podcasts too, which you should check out. Yeah, it's another very good reason to do it. And in theory, corporations last into perpetuity, as long as they don't get into trouble and you comply with corporate formalities, keep everything in good standing. They should outlive you and your child and everybody else. They have no term limits, no shelf life. Another reason to do it is just sort of the legitimacy, the halo effect that kind of comes with incorporating, right? There are lots of reasons that people do it. These are just sort of the 4, I think, primary reasons from a legal standpoint. Yes, sir? Kind of, maybe, sort of. Kind of, maybe, sort of.
Okay.
There are different reporting requirements that all of the agencies have, and we'll talk about the agencies that apply here. But if you are meeting the IRS's standards, you are often going to be meeting the standards required by the Attorney General or the Franchise Tax Board.
Oh.
So, okay. Now, what do you need to have to actually create your nonprofit corporation? You generally need to have a well-defined purpose that meets one of the statutory purposes listed in Section 501c3, right? Charity, religious, literary, an organization that's not, or it's about protecting against cruelty towards animals, right? You have to state somewhere and have that purpose. If your purpose is to make money for you and your wife, you're probably not going to meet 501c3 status, right? You need to, before you actually incorporate and head down that line, have a detailed description of your activities, what you do. I like to say, if you can't put 2 pages, single space, and 12-point font about what you do, the who, what, where, when, and why, and the details, then you're not ready to incorporate. You also want to have a core group of people to do the substantial work. Your steering committee, your advisory committee, the 5 of you who've been reading around the kitchen table, whoever those people are who are actually really going to be on the ground doing the work, and or who are going to take responsibility for the long-term success of the organization. If it's just you and 2 people or you and 3 people, that's okay, but there needs to be some sort of core people who are on board to further the corporation's purpose. And finally, Because this is a business. I started by saying this is kind of corporate law, despite being really exciting and having very altruistic motives behind it. At heart, the topic is one about corporate law. You need to have a budget and a financial plan that is based on realistic fundraising goals. Creating a corporation and obtaining 501c3 status is about money. And one of the core things that the IRS will ask when you apply for tax-exempt status is tell me about your finances. So before you even create the corporation, you're going to want to have these kinds of basic things mapped out. What's also helpful to have a lawyer. We're always very helpful, of course. An accountant and a bookkeeper. There are particular rules that apply to nonprofit accounting, and the bookkeeping is a little different, largely because of the way grant structures work. Grants come in sometimes delayed, sometimes stagnated, and they usually only have 1 year, 2 year, 3 life shelves, and that changes the way the accounting and the bookkeeping works. So I often recommend that before people really dive in, they try to find a bookkeeper. I have lots of recommendations, and that they get an accountant. In order of importance, I would probably go accountant, bookkeeper, lawyer, but don't tell any of my partners that. Before I move on to the incorporation process, where we talk about how to actually create the corporation, does anybody have any questions about what we've talked about so far? No, not to give away the ending, but you can, one, work with a fiscal sponsor who will lead you through those couple years where you grow, right? And the other is that the IRS recognizes that your organization may have only existed for 6 months. And so they ask for good faith, reasonable projections, right? And that's totally okay to provide. Okay, any other questions before I move on to the second part? All right, so we're going to talk about the incorporation part. This is how you create the corporation. It's really exciting. I'm going to give you the secret recipe. It involves a lot of forms. So, our necessities. You are going to need to have articles of incorporation, bylaws, initial resolutions, a conflict of interest policy, and you are also going to need to file with the Attorney General, and you're going to need to get an employee identification number from the IRS. And just to ground us in where we're at in the process, remember I said the one thing that I'd like people to take away from this this presentation, including some of you who came in late, the one thing I want you to understand is that there is a difference between a corporation, a nonprofit corporation, and 501c3 tax-exempt status. They are different things, they are not synonyms. And before you apply for a 501c3 tax exemption, which is a special status provided by the IRS, you have to create a corporation. And it has to be a nonprofit corporation as opposed to a for-profit corporation. And right now, we are talking about the necessities one needs to do that first step, to create the nonprofit corporation. This is actually the faster of the steps. And probably if you get forms together, there are lots of resources for forms. An organization called the Sustainable Economies Law Center has really great forms that you can pull and use. You can get these forms together and you and your core board can go over and review them, and you can usually get this done in a 3-week process with normal processing times with the Secretary of State. And it starts first with your Articles of Incorporation. Your Articles of Incorporation are kind of like the birth certificate of a corporation. They state the purpose of the corporation, the exempt purpose, its charitable purpose. One of those purposes is listed in IRC Code Section 501c3, right? So it will state what is the purpose of the corporation. It will include a statement that says that the assets of the nonprofit corporation are irrevocably dedicated to charity. This is what makes a nonprofit corporation distinct from a for-profit corporation. Nobody owns the assets of the nonprofit corporation. And so if it's ever dissolved, those assets have been irrevocably dedicated to charity, which means you can't, if you founded this organization, you put your heart and soul into it, you put a lot of your own money into it, and it's just not working out, you need to close up shop. All of the funds that went into the bank account for that nonprofit were irrevocably dedicated to charity. You can't pull them back out. So it's an important key thing to understand about a nonprofit corporation. And it also needs to be explicitly stated in your Articles of Incorporation. Yes, ma'am?
What happens with that money?
it must be donated to another nonprofit with a 501c3 tax exemption. Another provision that is required in your articles of incorporation is a statement that no private inurement will incur. It's very fancy. It's a fancy way of saying we're not going to use any of the assets of this corporation to line our own pockets, or anybody in particular. This isn't about making money for the individual. We may pay ourselves a reasonable compensation for our services, that's fine, but this isn't about making us money. This is about the charitable or exempt purpose that the corporation was started from. And finally, you also have to include an explicit statement in the articles of incorporation that says that this corporation will not engage in electioneering or legislative lobbying activities except to an insubstantial degree. All of these are statements, these musts are explicit written statements that the IRS and the state of California will look for in the articles of incorporation when you submit them. You submit them to the California Secretary of State. The California Secretary of State is like the DMV for business entities. It is the state agency that tracks every business entity in the state that's incorporated or an LLC or a partnership, including nonprofit organizations. And there's a $30 filing fee, or at least there was the last time I checked. It might be $35 now. What you do is you fill out these articles. This is called Arts PB 51C3. If you type this in, or if you use the handout I've given you, you Google it later, you can find this as a fillable PDF that's issued by the IRS. It has almost all of those musts that I said that you must have. And if you fill it in, you will most likely get all of the language that you need and the IRS needs. I highly suggest, if you're going to do this without counsel, that you use this form. And you sign it, date it, and send it in to the Secretary of State. It takes about 3 weeks to process. And once they put their stamp on it, a corporation comes into being. So it is like the birth certificate of the nonprofit corporation. So once you have your articles of incorporation, you need bylaws. Bylaws are closer to, they're kind of a hybrid between, let's say, a constitution and statutes. They are what outline how the corporation is going to be governed. Who's going to be in charge? A board of directors? What are the rights going to be between the board of directors? So you can have a supermajority voting rule, a consensus voting rule, a majority voting rule. How are they going to make decisions? And who's going to do the day-to-day activities? Is that going to be your officers? Are you going to call that person an executive director? Are you going to call him a chairman? Are you going to call her a CEO? And how often is everybody going to meet? And what are the rules around giving notice for meetings and voting new people on the board, and how long are they going to serve? Right? Your bylaws explain all this, and you want them and need them because the IRS will ask for them in your 501c3 tax exempt application, but you also want them because you want to understand how you're going to function. Despite what people say, corporations really are not people. They are business entities, and to function, the people behind them have to agree and make decisions together. And then those need to be documented in writing, either in meeting minutes or resolutions, because the corporation doesn't actually think for itself. The corporation can't actually walk down to the bank and say, I'd like to open a bank account today, because the corporation isn't a person. Instead, its officers or directors walk down to the bank and hand somebody a resolution signed by the board of directors that say, we, the board of directors, hereby resolve to open a bank account, right? And so you have to have bylaws that explain how everybody's going to act, what their authority is going to be, how people are going to elect it, how you're going to function. I encourage people to be really creative with the bylaws, especially if they're coming out of an arts organization. There are default rules in the corporations, but this is an exciting opportunity to imbue your organization with democratic processes, consensus building, especially here in the Bay Area, some of the more unique and egalitarian ways of approaching organizational activities. Any questions about bylaws? Yes, ma'am? So you can always adopt policies and procedures, which I think are more akin to like regulations or legislations. Like we're going to have an audit committee, and then the audit committee can adopt policies and procedures for how it works, right? There are lots of default, standards out there that people include. I think shorter is better. You want them to actually be functional, usable documents. The times that they come up most often for my clients, what I see is they say, we have a board of director dispute. How do we handle that? Well, you want to have that dispute issue already outlined in the bylaws. Or we've got this person we'd really like to remove. How do we do that? The removal process should be somewhere already in those bylaws. And so I think those are very important provisions to have, and to take the legalese out of them is really helpful so that people can actually understand what they're supposed to do. Because most of the time your lawyer's not really going to be running them. Yes, sir. So a lot of bylaws have what are called default provisions in them that mirror or basically state verbatim what's already in the corporation's code. The corporation code has sort of default provisions if you didn't adopt your bylaws and how board of director elections work. Your bylaws, you can change them. I think SELC is a really great place to look for bylaws. There is, I can't remember the name of the organization, but if you search Stanford nonprofit forms, a Stanford legal clinic did a really amazing job of creating lots of standard forms for nonprofit organizations to use, recognizing that there was a real need for that. And I highly recommend you check those out. And so you can kind of compare and contrast. There's also an organization, a lawyer called, or a legal blog called Nonprofit Issues, which has really fabulous forums and guidance. Initial resolution. So you've got your articles of incorporation, the nonprofit is born, you've got your bylaws, you understand how you're going to function. Now, at the very inception of the corporation's life, the board of directors who have been appointed need to pass some very basic resolutions. You can do this at your first annual meeting, which I highly recommend because it gives you an opportunity to act out some of the things in your bylaws. How are you going to run your meetings, right? How are you going to facilitate that process? But you can also do it through a standard set of initial resolutions. And these say sort of very standard basic things like we're going to have these 3 officers and we're going to we authorize our president to open a bank account for us. We also authorize our president to apply for 501c3 tax-exempt status. We also authorize our president to, sign checks on our behalf, right? You need these basic kind of initial resolutions to be done so that you can actually open a bank account. You can have that resolution for somebody to take down to the bank. And because the IRS will ask you how you adopted your initial conflict of interest policy and some of those things in your tax exempt application. So this is one of the things that you should get done at the very beginning of the process. Either have a meeting where you take these initial steps or you have your initial resolutions drafted by an attorney or using a form online. One of the things that you will want to adopt in your initial resolutions is a conflict of interest policy. The very basic reason you want to do this is because literally the IRS asks in the tax exemption application, have you adopted a conflict of interest policy? So you want to be able to say yes, and you want to be able to give them an example of it. This is the standard sample conflict of interest policy provided by the IRS. It's attached as Appendix A to the instructions to the tax exemption application. If you Google sample IRS conflict of interest policy, you will get this. You can copy and paste it, and that's sufficient. The less jaded reason for having a conflict of interest policy is because it's just a really good corporate governance policy to have. It's necessary because the whole concept behind a nonprofit corporation is that it's for the public. It's not for anybody's private benefit. And so it's important to have policies in place that actually ensure that you can police that, right? You can actually require your board members or your officers to disclose if they have any potential conflict of interest and to remind them of that importance, that they need to be aware and looking out for conflict of interest. So that's one of the first things that you adopt and handle. Once you get all of that done, you've got your articles of incorporation back from the Secretary of State, they're stamped, you've got your resolutions done, you've got your bylaws. You're going to file a registration statement with the California Attorney General. It is called Form CT1. In California, all entities engaged in soliciting charitable funds. If you are out there asking people to give donations to your arts organization, you are soliciting charitable funds, and you are engaged in conduct that the Attorney General regulates, and they ask and mandate that you register with the Attorney General, so that they know who's out there and they know who's engaged in this activity so they can police it. I know no one in this room would engage in this, but there are people, believe it or not, who take advantage of the nonprofit structure to commit fraud and line their own pockets, right? This is what the Trump Foundation is being accused of doing. And the enforcement agencies that monitor that and make sure that people are not being taken advantage of when they are asked to give charitable donations by the Attorney General. If you are not registered with the Attorney General, there are fines that will build up, and you are technically operating illegally under the law. I have clients who have failed to do this registration process, and 5 years down the line, because they didn't know that they were supposed to do it, are getting hit with some pretty severe penalties, and their entire operations have been halted because they didn't know about this initial process. Okay. Once you're registered, you have to submit an annual registration. That's called Form RRF1. It's supposed to be submitted every year. If you're working with an accountant, typically your accountant will submit that registration for you. Now, if you're going to operate outside of California and solicit funds in other states, almost every other state in the union has a similar law requiring nonprofit corporations who are doing charitable activities to register with these similar state agencies in whatever state that may be. So if you're going to go national, keep in mind that it is sort of a big administrative burden. It's something to be aware of. There are folks out there who really know this process and can do it cheaply. It's kind of one of the things I would suggest if you're getting to that size and scale that you outsource. Okay, any questions about registering with Attorney General? It's the state. So what will happen is you will mail in your articles of incorporation, and maybe 3 weeks later you'll get a package back from the Secretary of State, and in it, one of the things that you will get is a file stamped copy of your articles of incorporation, and then a very helpful flyer about registering with the Attorney General and how to do it and where to do it, and then you will register with the Attorney General. I think you have a 30-day window to do that. The annual form is called RRF1.
RRF1. Thank you.
And then the initial form is called Form CT1. Yes, ma'am. There are similar laws in many countries requiring you to register. I'm not an expert, but you will want to be aware in whatever jurisdiction you're operating in about those rules. These regulatory systems were designed before the internet and before that kind of fundraising. And so it's complicated. I would say at the very minimum, you should be registered in the state where you are headquartered and where you're doing the most of the work. So if you're here in California, you're working around an issue that affects California, you absolutely need to be registered with the Attorney General. If you were doing a national campaign, then you really need to think about whether you should be registered in every state in the union. If you are soliciting funds from abroad, you have a whole lot of issues in addition to whether you should be registered in Canada or the UK. If you were specifically targeting, let's say you were doing advocacy work around repealing the 8th Amendment in Ireland a few months ago, right? Maybe you want to look and focus specifically on what's going on in Ireland, whether or not it's appropriate for you to be soliciting funds from that country targetedly, right? So I can't give you the answer. I can tell you it's an issue, and as you move forward, you can be aware of that issue and hopefully spot it when it really becomes an issue. Okay, so registering with the Attorney General, and finally, the easiest task of all is applying for an EIN. An employer identification number, or EIN, is a business social security number. When we all fill out our 1040s, we have to put our social security number. That's how the IRS knows who we are, how much we owe. If we're lucky, maybe how much we're going to get in a refund. An EIN is the same thing for a business, because businesses are taxed, right? unless you have 501c3 exemption, which we'll get to next. But generally they're taxed, and so to do business, you need an employee identification number. You get one online. You can type in, apply for an employer identification number, make sure you're actually at the IRS's website. Don't pay anybody to help you do this unless it's me. For the most part, it's very simple to do, and you can get your EIN, and then once you have one, you're ready to kind of operate and do business and be a nonprofit organization. So let's talk about part 3, obtaining the tax exempt status. We're going to talk about 4 topics. It used to be 3, but there's now a new fabulous one called Form 1023 Easy. The first 3 are Form 1023, Form 3500A, and then more annual filing and form requirements. As I mentioned in the beginning, one thing I really want you to take away is that having a 501c3 tax exemption is different from having your nonprofit corporation. Having a 501c3 tax exemption entitles the nonprofit corporation to not pay income taxes. Generally, there are some exceptions, but for the most part, they are not required to pay income taxes, which is a huge boon operating, right? Until very recently, the corporate tax rate was around 34%. It's 22% now. That's a lot of your revenue, and if you could use that revenue for your mission-driven purposes, you would much rather do that, right? So it's a really big advantage to have. The other key thing about it is it provides you the ability to fundraise, to go out to people and say, if you give me your money, you can take a tax deduction and lower your own tax rate or your own taxable basis. For the most part, foundation money, right? The Hewlett-Packard Foundation, the Horizons Foundation, all of our big foundations out there only generally give donations to organizations with 501c3 tax exempt status as well. And so it's a really, really big key tool to make money so that you can actually fund your artistic endeavors. And that's why we do it. It is not itself, however, an entity or a thing. It's a privileged status. Okay, how do you get it? You fill out a very complicated form with the IRS. So, on to the forms. The first one is called Form 1023. Application for recognition of exemption under 501c3. It's actually been redone, I think, in 2016, so if you're pulling this online, make sure you're looking for the 2016 form. It is, with all of its schedules, about 30 pages long. Without its schedules, it is 12 pages long, and it's detailed. It asks a lot of questions about the who, what, where, when, and why of what you are doing. The essential components of the application are the form, right, that 12 to 30 page form. The supporting documents. What are your supporting documents? Your articles of incorporation, your bylaws, your conflict of interest policy, maybe a copy of the initial resolutions that your board passed during your first meeting that show that you adopted the conflict of interest policy, copies of your website, your fundraising materials, what the sort of hard copy documents that show what it is you do. Right? And that you are a fully functioning corporation. And then you usually include what I call the attachment. It's a Word document that you've typed out and explained the who, what, where, what of the organization. When you go through the 1023 application, you will see that there are lots of questions that say, do you give grants to people? If so, please provide a detailed explanation to how you give grants. There's no space on the form to explain that. Instead, you type that out in your attachment. So those are the essential components of the application itself that you'll be putting together if you're applying for a form or you're applying for a tax exemption. Most challenging parts of the form. There is part 4, the narrative descriptions of your activities. And the IRS here wants to hear the who, what, where, when, and why of your organization. This is where you take that 2-page, single-spaced, 12-point font description and put it into your application. And this is why I recommend that if you can't do that, don't even form your corporation yet. You're not ready, right? You're not ready to apply to tax exempt status. And when I say the who, what, where, and why, I mean full sentence, kind of explain what it is you do. We are an arts organization dedicated to fostering the appreciation of enamel arts. We are based in Richmond, California. We have a board of 5 people. We put on 3 fundraisers a year. We have 5 exhibits. We run 6 educational programs for local Richmond schools. We are hoping to one day have a space because enamel art is big and huge. It involves big pieces of steel, so we're working on that. How are we going to do that? We're going to do that through applying for grant funding, right? You want to be able to kind of really talk about what it is you do. So that's typically the most challenging part. And it's the part where you explain to the IRS why you're entitled to this privileged status. So it's really got to be tied to one of those charitable activities. You've got to show that it's not about anybody's private interest, right? So you can't say, I'm an artist and I'm very excited about showing everybody my fabulous art. I'm going to open this gallery. It's going to have all of my great pieces up. I'm going to sell my art. It's going to be great. It's all artistic, which is charitable, some lawyer told me. No. You have to be able to explain in this part how your activities are public in nature. You are really excited about introducing disadvantaged communities to a particular type of art, right? Classical music doesn't make it out to East Oakland very often. How are you going to promote that appreciation among children, among families who aren't usually exposed to that kind of art? That is about a public activity, right? That is about the charitable aspects of the art. And that's what you need to explain here for your pitch. The next hardest part, I think, the form is the financials. The IRS will ask you to provide 3 years of projected financials and a balance sheet. What is it going to cost to run that enamel art center, right? What are your expenses? So you have to have a realistic conversation with you and your board about what those expenses are. Well, we're going to rent gallery space, we're going to rent studio space, we're going to have to pay for a website, we're going to need an accountant. I don't know, maybe we have a little bit of space for legal fees, and we're going to want to travel to that one exhibit every year, so what's that going to cost? All right, so we have a sense of our expenses, and they're realistic. You've researched them, you've tied them to something. And then that basically tells you what your revenue stream is going to be. So where are you going to get that revenue stream? Well, we've identified these 5 or 6 grant sources. We think we're going to be able to do it there, and then we're going to have these fundraising activities. We're going to do a gala. We're going to do a carnival, whatever it's going to be, right? And you spell that out in numbers using a pre-populated form they provide to do basically a balance sheet and then an income statement. And so, again, it's a sort of business endeavor. Like, what's the business plan kind of idea? And the final part that I think is most challenging for folks doing it on their own is there's a $600 non-refundable fee, and it can take 12 months is a little, it can take, on average, between 4 and 6 months. At one point, it was taking 12 months for the IRS to process these. Right now, they're a little bit faster. I just had one processed in 4 months. I had one that took 6. This is a bad time of year for the IRS coming off of April, so they are processing, and I think the next year, in light of the new tax changes, is going to be a big year, and it's going to slow down the IRS. But it takes a while. So if you're expecting to get a grant next week, you don't expect to be able to do some sort of expedited process. This is sort of a long-term, start at the beginning of the year, let's hope at the end of the year we've got our tax exemption kind of process. So that is the Form 1023 application. There is something called Form 1023 EZ. In light of the fact that it used to take 12 months for somebody to get a tax exemption, the IRS thought maybe we could figure out a way to facilitate this process and make it easier for particularly small organizations. And it started in 2014. It's a streamlined online process. It takes the IRS about 3 weeks to process these. There is no financials. There's not a very long narrative statement. You don't have to attach your bylaws, any of those things. You do have to attest under oath that you anticipate over the next 3 years of having less than $50,000 in annual revenues and less than $250,000 in assets. You can't be a church, a school, a foreign organization, certain hospitals, those are all ineligible. But if you're a local PTA out in the suburb, or you're a very small little league, or you're a very small arts organization, this might be a really great option for you. The Lisa Simpson do-gooder in me says, you know, if you really think that you're going to actually be a $30,000 organization, this is not the right approach for you. It is a It is a statement that you're gonna be making to the IRS under penalty of perjury. So it shouldn't be used as a shortcut when the appropriate form is the full 1023. But for a lot of organizations out there, I think this is a really great option. And so please do check that out if it's appropriate for your organization and get your tax exemption much faster. Okay, so that's Form 1023-EZ. Do not forget that there is a taxing agency on the state level too. The Franchise Tax Board is a California IRS, and they require that you also obtain a tax exemption from the Franchise Tax Board. They've made it easy. If you get your IRS tax exemption, all you have to do is attach a copy of that tax exemption to Form 3500A. Form 3500A is 2 pages. It's very easy. You fill it out, you staple a copy of your IRS tax exemption, and you send it off. It's the very last thing you do in this process. It takes 90 days for the Franchise Tax Board to process that, almost to a T. They won't process it any faster. They won't process it any later. That's when you'll get it back. And then you take the Franchise Tax Board determination along with your IRS determination. You scan them, you save them, you make multiple copies, and you stick them in your records book and you keep them forever into perpetuity. Yes, ma'am. In that very, very lucky scenario, I think you're okay. In that really fabulous moment of fortune, that would be okay. I think if you have, I guess the do it or warning to me is more if you really have realistic operations that you know aren't going to run on $50,000 a year, then you shouldn't be filling out this form.
Right.
I'm not quite sure if you have an organization like that, why anybody would feel the need to give them $1 million, right? You know, a smaller grant would probably be more than sufficient for them to run for some time. And so if what I would be worried about in that context, if it was my client, is an audit. Because that's a very peculiar couple years of finances based on the information you provided in the 1023-EZ. But in theory, there's nothing inherently wrong with that. Yeah, you don't ever have to reapply once you get your tax exemption unless you mess up. And we'll talk about that next. All right. Any questions about the application process? Okay, so just to go over our big timeline, we have created a California nonprofit corporation. We got our articles of incorporation back. We created our formation documents. Our board is up and running. Then we applied for tax exemption. We waited 4 months. We got it. Great. Everything's up and running. That lawyer once told me we didn't have to do anything else. Not quite. You have to keep up with annual reporting requirements. Like any other business, you have to submit a tax return to the IRS and the FTB every year, in fact, even though you're not paying any taxes. These are called on the IRS level, Form 990. At the state level, it's Franchise Tax Board Form 199. The particular types of forms you have to fill out based on your gross annual revenues are listed here. Some of them are very easy, some of them are very complicated. If you are needing to file a standard Form 990 because you have revenues in excess of $200,000 a year, I highly suggest you have an accountant help you with the Form 990. They're kind of complicated, much more complicated than your standard 1040. What I want you to take away here is especially if you go out and get that 1023-EZ determination letter and you've got a smaller organization, don't forget in a year around early January that you have to file tax returns for the organization. In addition, you also have to file that annual return with the Attorney General, Form RRF1. Failing to do this for 3 years in a row will result in an automatic loss of your tax determination letter. I think this happened around 2005, 2006, 2007. But the IRS and the FTB looked at their rolls and said, we have tens of thousands of nonprofit organizations that got their tax determination letter and they never filed tax returns and they are delinquent and we don't know what they're doing, and we don't know who they are, we want them off our rolls, we want to get rid of them. And so they created this law that said, if you do not file a tax return in 3 years as a nonprofit organization, we will take your tax return, or your tax exemption away. And the idea is those organizations will lose their tax exemption. Eventually, they will be administratively dissolved, and they will be taken off the rolls. It also creates a very punitive result for smaller organizations who are starting up and forget to do the tax returns 3 years in a row. Because then you've got to do the whole thing all over again, right? And in the meantime, you're operating illegally. Because you are out there telling people you have the ability to provide them a tax deduction when you don't. Because you don't actually have an active 501c3 tax exemption. Before we go on to our very, very last topic, does anybody have any questions? Okay, very last topic, alternatives and resources. This is my favorite part of the presentation because this is the part of the presentation where I talk you into not starting a nonprofit corporation. There are so many good reasons not to start a nonprofit corporation. We've talked about it. It's a really big endeavor. It could cost you a lot of money. It could last into perpetuity, and it's big and bulky and like hard to run. You have to have a board of directors, you have to have officers, you have to have bylaws, and it just might not be the right thing yet. Here are a number of reasons. One, you don't have other people on board. You don't have that board yet, right? It's you, it's your vision, and maybe you want to keep it that way. Maybe you're not looking to engage in sort of a more communicative or communal-based democratic process of running something. Maybe you've got your passion and you want to keep it that way. And maybe you want to make money off it, right? Maybe if you dump a ton of money in it, you don't want that ton of money to be irrevocably dedicated to charitable assets. You want to get it back if it doesn't work out. Now, you may still have artistic and altruistic goals that you're going to use that money for, but you don't want to be in that very sort of constrained position of operating under the nonprofit laws. Starting up also takes time. You know, I've been talking about a 12-month process. At the least, it's at least a 2 or 3 month process. You want to get started right away. A nonprofit corporation might not be the right place to go. One of my favorites, especially for arts organizations, is how often and how long is this activity going to start? If you're doing a one-time music festival, a nonprofit corporation is not the right vehicle to do it in. Now, you want limited liability because people are going to be drinking and there's going to be children there and people could try crowd surfing and people could get hurt. So you definitely want some of that, the aspects of a corporation, but you don't want it to last into perpetuity. So maybe there is an alternative, right? Same thing with the last one. Maybe there's an organization out there that's already doing that. Maybe we could partner with an existing music events organization to put on a charitable art festival instead of doing it all of ourselves. I have more reasons not to start a nonprofit corporation. You want to give money to an individual or a very small group of people. Now, I talked earlier about how nonprofits are about public activity. The IRS will look to make sure that your charitable class is broad and indefinite. So this year we're not providing a private benefit to any particular person. If your charitable class is identified as the Johnsons who live at 1235 9th Street, your parents' best friends who ran into hard times and really need help with an eviction, that's not a charitable class, right? That's a known set small group of people that you're trying to benefit. And a corporation is not the right structure for them. Now, if you also don't like rules and regulations and bylaws and annual filing requirements and all of those kinds of things, this is also not the right structure for you. Finally, it's expensive and it's very public. 990 filings are public filings. You have to list the 5 highest compensated individuals in your organization and how much you're being paid. If you want to find out how much the director of the Gates Foundation gets paid, you can look up those 990s on GuideStar and find out. You can also find out what their operations are, what they're doing, right? There are very, very highly public entities, and for good reason, right? We want to know what people who are promising to do good deeds with charitable funding are actually doing. All right, any questions about reasons not to start a nonprofit?
What about, well, if I'm not gonna start a nonprofit, what are my alternatives, Casey? There's fabulous ones. First, you could operate through what's called an unincorporated nonprofit association. You could set up a for-profit business, such as a sole proprietorship or a fabulous for-profit corporation. And finally, you can engage in a fiscal sponsor. This is not an exclusive list of alternatives. There are lots of other options. You can partner with existing organizations. You can do a one-off, sort of like much less formal activity. So please don't keep this as some sort of exclusive list or think of it as that. An unincorporated nonprofit association is a more informal version of a corporation. It comes into existence when one or more people sit down and agree to engage in an activity not for profit. And in the eyes of the law, once they do that, they sit down, they are around a kitchen table, they say, I really would love to see more ballet in Walnut Creek. How do we do that? How do we bring that to the community? They start working on that activity. That's an unincorporated nonprofit association. And they can fill out a one-page form available on the Secretary of State's website, and that gives them a little bit of that sort of polish, so they can go to other people and they can tell people we're an unincorporated nonprofit association. But they don't need all of the bylaws, they don't have to have all of the initial resolutions. They can function much more informally. The area around limited liability is not as clear, but there are some provisions of the Corporation Code that say unincorporated nonprofit associations enjoy some limited liability, so you can enter into contracts. Yeah, the area of law is not perfect, right?
Great.
I think it's a really nice transitionary piece where I've seen it work really well for clients, are around neighborhood associations. You know, I helped a client recently who had a creek running through the back of like 7 homes, and it was being endangered by a development, and they wanted to start doing public advocacy around it. But nobody wanted, you know, they were bringing in money, right? They had, I think, $30,000, and no one wanted to include it as their personal income. Like, no one wanted that, right? They also didn't want to pay income on it. Like, they weren't quite sure what to do, and so we formed an unincorporated nonprofit association. They'd kind of already done it, but we filled out the one-page form, and then they were able to open a bank account, and that's what's holding the funds. And it's sort of a more informal way of functioning. You could also, remember, as an alternative, have a for-profit business, right? Maybe the nonprofit structure just isn't right for you. And then it's a standard proprietorship, or it's a standard LLC, or it's a standard general partnership, and you function like a normal business. But without all of the irrevocable dedication of assets, without the Attorney General regulations and supervision. Finally, fiscal sponsorships. What is a fiscal sponsorship? It is a way of starting a nonprofit organization that doesn't have all of the administrative burdens attached to a full functioning 501c3. Instead, the project will partner with an existing nonprofit that has its own 501c3 status. And in exchange for an administrative fee, that 501c3 organization or fiscal sponsor of the project will provide back-end administrative support. Often accounting support, payroll support, sometimes counseling and educational support, helping the leaders of the organization learn how to run a nonprofit. Right? There are different types of fiscal sponsorships you may run into when you're researching this, the concept of a Model C or a Model B or a Model A. The two that I really want you to understand are, as a Model A is the project is basically a aspect of the fiscal sponsor 501c3 organization. So you want to start your arts organization, you partner with the fiscal sponsor over a 2-year period while you get your sea legs, where you learn how to do things, but you have grant money coming in. So you partner with your fiscal sponsor and you say to donors, I have a fiscal sponsor. You can make donations to them, earmark them to my project, and they will make sure that those funds are used for my project. My fiscal sponsor provides me with administrative support, so they would take 7% of every donation in order to fund those expenses. But your donations to my fiscal sponsor are tax deductible like they would be for any other 501c3 organization. So it's a way of bringing in the tax deductible funding. It's the way of not having to take on all the administrative burdens of getting an EIN, of having your own employees, of getting workers' comp, everything that comes with running a full business. But still being able to kind of be your own organization and build out. It's a way of slowly scaling. It's negotiable with you and the fiscal sponsor. Fiscal sponsor administrative fees, last time I checked, range between 6 and 10%, often going down as the donations go up. Their baseline, some people see this as a conduit, basically. Give to that organization that's got a 501c3 status, and then they'll give to me, right? That's not how it's supposed to happen. Fiscal sponsors are really supposed to be sponsors. They are supposed to be guiding their projects in developing their activities, in ensuring that the project's activities are actually furthering a charitable or artistic purpose, and making sure that those funds are used properly, providing real services. So if you are looking for fiscal sponsors and you find some that really just seem like they're offering you a conduit, they're just offering you a funnel, that's not really on the up and up. That's not what the IRS says proper. It is not what good legal counsel will advise you to work with. They're very common in the arts organizations because of the way I think a lot of art projects work. Sometimes they're short term, sometimes they're multifaceted, they are often changing, they are often fluid, they are often responding quickly to the zeitgeist and the new things that are happening in the broader spectrum. And so if you are looking for a really good one, I really like Fractured Atlas. It's the largest fiscal sponsor, our arts fiscal sponsor in the nation. Here in the Bay Area, I've heard fabulous things about the Tides Center. Social Good is an Oakland-based one, Independent Arts Media, and then finally, here are some resources in your handbooks or your handouts for finding other fiscal sponsors. Questions on fiscal sponsorship? Yeah, a lot of grant applications will say, do you have a 501c3 tax exemption or do you have a fiscal sponsorship agreement? Please provide copies of both. And sometimes they will ask you to provide a copy of your fiscal sponsor's tax determination letter. But yeah, that's exactly it. You can then, with a fiscal sponsor, start going out and applying for all those grant applications that you'd otherwise be ineligible for. And some of the really good ones will help you in that process, assist you in learning to apply for grants, and directing you to potential grant opportunities that you might not have been aware of. Resources. This is sort of the wrapping up part. I want to make sure that everybody has in hand or for the future places they can look for additional resources. So here are a list of some of my favorite organizations, grant space, like we were talking about if you're looking for donations. The Nonprofit Resource Center is really great. Two of my favorites here are the National Council for Nonprofits and the California Association of Nonprofits. These are themselves nonprofits that are established and set up to provide resources for other nonprofits. On the national level, they advocate for legislative action in Congress that helps and supports the nonprofit sector. The California Association of Nonprofits is the same thing on the California level. California Association for Nonprofits also has really great webinars for starting up your nonprofit, running your nonprofit, how you handle all of these things. GuideStar is sort of the preeminent ultimate organization on collecting and gathering information about all kinds of nonprofits that exist out there. It's a great place to do diligence on your fiscal sponsors if you're researching them. And then if you want just kind of like hard copy, how to do this yourself book, I think Nolo Press's guide on starting a nonprofit is really approachable, really readable, no legalese, and it has a lot of really good forms. So, and they didn't pay me to say it. Nobody I've promoted has paid me to say anything. Government resources. Like I said, there are a lot of government agencies that regulate nonprofits. The Internal Revenue Code has, I think, a good website. It's a little bland, like the Internal Revenue Code would be, but there's a ton of really good information and resources on there. You can sit down and read it, including just their instructions to Form 1023. I think it's like 30 pages, but it's really, really helpful. Every time I'm working on one of these, I read the instructions myself. I think they're really, really handy. The Franchise Tax Board also has some very good information. Same thing with the California Secretary of State and the California Attorney General on how to operate, what's expected of charitable organizations. So don't forget to check your government resources as well. And that's it. Any questions? I think we have some time. And so I'm happy to take questions now, especially so our folks online can hear some of them. Completely different things. There is no difference between you and a sole proprietorship. If I go out on the street and I'm going to sell fancy bracelets and I don't do anything besides walk out in the street and start selling them, that's a sole proprietorship. So I list the income on my 1040. If my bracelets have some dye in them that cause an awful rash that starts an epidemic, that's all on me. If I enter into a lease to sell bracelets out of a store at the mall and I default and I end up with a big debt, that's all on me. I'm gonna have to figure out how to pay for that myself. A limited liability company is a business entity that you can create by filing certain forms with the California Secretary of State that will provide you with some limited liability between you and the activities of the business. So if I went out through my limited liability company and all of those things happened, hopefully my liability would stop with my limited liability company. And they might be on the hook for that debt to my landlord and having to deal with the epidemic. But if I followed all the appropriate formalities, including making a good faith effort to provide insurance for my company, I would hopefully not experience my own personal assets being attacked for those debts and actions of the business. So that's the difference. A limited liability company and corporations are business entities that you can create by filing forms with the state. Sole proprietorship is just you. Yeah. Yes, sir. There are quarterly requirements that would apply to any business. So if you're going to have payroll, you're going to have quarterly payroll returns in that sense. But there are no quarterly filings that are particular or unique to nonprofit corporations. Okay. The particular unique filings for nonprofits are your annual registration with the Attorney General and then your annual tax returns. And those are the Form 990 and the Form 119 that I told you about.
Thanks.
Yes. The minimum number of people you're going to need to have on board are 2. So in California, you can have a board of 1 under the California Corporations Code. I would not recommend having a board of 1. I would have at least 3. But the reason I say 2 is you are also required to have officers. The officers you're required to have are a president, a treasurer, and a secretary. The same person can be the treasurer or the secretary, but the same person cannot be the president and or the treasurer and the secretary. So you need 2 effectively, which is why I say 2. Now, don't get hung up on those titles. Really, you need to have sort of a chief. You need to have somebody who's in charge of the corporate records and somebody who's in charge of the money. You can call them a CFO or a treasurer. You can call them a secretary or corporate records keeper, whatever you want to call them. You need to have those roles filled. So at least 2.
Okay. Thanks.
Yes. Specifically, a nonprofit corporation with a 501c3 tax-exempt status may not endorse a candidate for election to office. So your minister may not stand up at the pulpit and say, vote for President Obama again, or vote for Libby Schaaf. So that's the first rule. The second rule is that nonprofits may not engage in lobbying activities except to an insubstantial degree. So that is not a per se, you can't do it at all. Nonprofits engage in legislative lobbying activities all the time. And Mothers Against Drunk Driving is a nonprofit organization that advocates for stricter drunk driving laws, right? How they do it and what they do is largely through volunteer activities. And they have lots of other activities that they do. They have awareness activities, they have activities at schools, they have educational activities. Their legislative activities are an insubstantial part of what they do. You know, if you have an organization that really all it's going to be doing is advocating for legislative change, you want to function through a different type of entity, probably a 501c4, which does not have that limitation, but does not have the capacity to give tax deductions. So. Yeah, there's pro forma language that you say that says the nonprofit will not engage in legislative activities except to an insubstantial degree. If you use that's not the like very strict language that I would recommend. If you use the Secretary of State's form, they have that kind of language that you need to include. Yes. No, it means that if you create a limited liability company following the sort of requirements that the state says, this is it took me a very long time to get this in law school, but basically a corporate entity comes into existence because you followed these certain corporate regulations. And that limited liability company or that nonprofit corporation or that for-corporation corporation now exists separate in the eyes of the law from you personally.
Right.
My recommendation is that you in general go out and try to find insurance, because if you sell toxic bracelets and you enter into a lease and you take on all these liabilities through your company, but you didn't take reasonable steps to ensure that you had sufficient funding, the LLC had sufficient funding, and the LLC could sufficiently protect itself against liabilities, the courts and debtors will try to what's called pierce the corporate veil, or the limited liability veil, and go after the people behind the corporate entity. In general, also for your directors who are going to be serving on your nonprofit boards, they're going to want to see insurance, and their own liability depends on the nonprofit seeking and obtaining reasonable insurance. If you're really going to go out there and you're going to run a nonprofit corporation, insurance should be like the #1 thing you deal with right away. There are lots of good brokers out there who can help with that, lots of very good companies. The Nonprofit Insurance Alliance is one of the largest providers of nonprofit insurance in the IAC and IAC. The types of policies that most nonprofits have are directors and officers liability, general business liability insurance, employment practice liabilities insurance. There's sort of a host of policies or products you can get to properly cover the activities of your organization.
That stuff might be in the NOLO press book.
I suspect the NOLO Press book has a section on the type of insurance your nonprofit should have. Yeah, I mean, I don't know off the top of my head, but no.
Thank you.
Any other questions? Yes. It's easier. So the primary benefits is it's slightly more informal, it's easier, and it sort of just comes into existence on its own. You don't need to necessarily have bylaws, you don't need to have formal governance structure, you don't necessarily need to even have a board. You could call it, you know, the steering committee or the alliance or the neighborhood group. But you might have just a couple needs where you really want it to have a separate existence, right? So maybe you're not engaged in particularly high level risky behavior, right? You're not selling anything, you're not inviting people onto a place where they can get hurt, you're just doing like maybe a very simple charitable activity. There's this, it's like a Tibetan music fair that happens every year in Berkeley. I'm fairly sure they're an unincorporated nonprofit association. Right? This is all they do. They have this one fair. It's kind of pretty chill. It's pretty easy. And it's a bunch of women who've been doing it for 50 years. And so they might have a very simple structure for doing that. And sometimes to kind of give that unincorporated nonprofit association a little bit of more formality, you can fill out the optional form online and then use that to open a bank account. It's primarily what you do. But it doesn't have sort of all of the filings with the Secretary of State and sort of those sorts of things that are mandated. Yes? once you start having the sort of level of assets, the risks increase. And so you would probably want to spend some of those assets to create a more formal structure that provides more protection for the organization. It's on the Secretary of State's website, has information about it. I think the NOLA press book also has a sort of introductory section on it. But if you Google California Secretary of State unincorporated nonprofit association, you should find information on it fairly easily. Okay, I think that's going to be it. I will hang out and answer any questions, and if nobody else has anything else, we're adjourned.
Thank you.
Thank you very much for watching. If you would like to see more videos by California Lawyers for the Arts, please like and subscribe to CLA's YouTube channel so we can provide full-service live streaming programs soon. Our channel will be producing videos that cover all kinds of artistic, entertainment, and intellectual property legal issues. You can also find our videos on Facebook and livestream.com.